Rates fall today as Treasury attempts to step in and create some stability in the bond market. And it's not a new program. Treasury's been actually injecting money into the buying of 10 and 30-year maturities since May of 2024. The difference today is really the size. So, is it going to push interest rates lower? That's what everyone really wants to know. And I've seen some headlines today, the clickbait, interest rates are going to plummet, blah, blah, blah. Stop the presses. Stop with the nonsense. I hate all that clickbait shit. You want good answers, come here. And my answer is no, it's not going to. And the reason why you're not going to see interest rates plummet is because of everything else that's going on. Just because Treasury is going to double the size of the liquidity injecting into the maturity market, it doesn't take away the conflict. So it doesn't remove the uncertainty. It doesn't change the outlook of the Fed, who is basically all hawkish at this point, given that we have inflation that is elevated. They're talking about embedded inflation. They believe that the labor market is stable, so that's off the table. So you still have everything out there that has pushed rates up. So by pushing more liquidity into that, it's going to be a temporary fix. Now, should the conflict end, could be something that the market really needs, and we could potentially see interest rates in the next 6-9 months now get down around that 6% high 5 level like I've talked about before. But we need this conflict over, and we need to see inflation pulling back. So who am I? My name is Kevin Weedmark, aka the Mortgage Mouth. Each and every day I bring to you what happened in the marketplace, how it affected interest rates, what do we got going out into the future, and should we float or lock? And I'll throw this out there as well. Is today's announcement a precursor to get ahead of the fact that there's going to be escalation to this conflict from a military side? Interesting. So, am I in the float or lock camp? Look, rates dropped today. I would be floating pricing from the lenders on the yield spread premium side. So I would waiting at this point because we don't have really significant data that I believe can move the market the next couple of days. On the flip side of that, if you need to lock, you have a purchase coming up, make sure you're talking to your lender regarding yield spread premium, getting your closing costs covered, creating more affordability for yourself, and putting yourself in the best financial position to refinance when interest rates drop. That would be awesome. All right, y'all, you got a comment? Appreciate you hitting that subscription button. Got a question you want answered? Bring it. This guy right here would love to answer it for you. Talk to you tomorrow. Until then, cheers.